Good afternoon. This is Sean Golding with Golding & Golding, here to talk a little bit about filing late FBARs and trying to avoid, minimize, or abate penalties. And so some taxpayers who failed to file the FBAR timely in prior years may qualify for something called the delinquent FBAR submission procedures. It's a little different than some of the other programs, so let's jump in and see what we got going on. So the FBAR, right, is used to report foreign bank and financial accounts for FinCEN. FinCEN is the Financial Crimes Enforcement Network. It's due April 15th, but it's on automatic extension. It requires U.S. persons, individuals, and others to report bank accounts, investment accounts, stock accounts, pension, retirement, personal or employment-based, certain life insurance policies, pooled funds like mutual funds and ETFs, each year when the aggregate value is met, and the requirements means if it's more than $10,000 on any given day of the year. Basics. But what happens if you miss filing the FBAR, right? Well, you go online and you read a little bit, and it makes it seem like, you're automatically willful, hundreds of thousands of dollars of fines and penalties, possible criminal enforcement. Chance of all of that is very rare. Okay, the IRS does penalize, and civil penalties can be harsh, but some taxpayers may qualify for something called the delinquent FBAR submission procedures. This is different than other programs such as streamlined procedures or the voluntary disclosure program. It's essentially an alternative for taxpayers who meet the requirements. So let's go through it. First requirement is obviously the FBARs weren't filed, right? Because if your prior FBARs were filed, you wouldn't be listening to this. But if you missed filing the prior FBARs, then you may qualify. And I'm going to get back to this in a minute about what happens if you have other forms as well. But right, step one, you missed filing the FBAR in 1 year or multiple years. 2, you're not under auditor examination. So if you're already under auditor examination for anything, technically you're supposed to tell the IRS agent, officer, that you have these unreported accounts. So once you're already under auditor examination, you can't do the delinquency. You can't do the other procedures as well, like voluntary disclosure, streamlined, but we're just focused here on the delinquent FBAR submission procedures, and so you can't be under audit or examination for these procedures. And third is you haven't been contacted by the IRS. So maybe the IRS reached out and said, hey, we noticed that you haven't filed FBARs, and you go, oh, okay, you know what, I'm going to run and do the delinquent FBAR submission procedures and try to avoid the penalty. It doesn't really work that way. It's about timing a lot of this, right? The idea is you want to be proactive and you want to get in there before the IRS reaches out to you, before they have you under auditor examination, because then you lose the opportunity. A couple of key facts about the delinquent FBAR submission procedures that taxpayers should be aware of. The first one, obviously, is the taxpayer has to be non-willful. Non-willfulness is the most important component to any of these disclosure programs trying to push reasonable costs, streamline procedures, things like that. For the voluntary disclosure program, VDP, you don't have to be non-willful, but those penalties are much higher. Taxpayers don't want to do voluntary disclosure. If they can avoid it, that's for people who are willful and fraudulent. So, and you have to sign that under penalty of perjury. So it's not something, even if you want to err on the side of caution and be as conservative as possible, that's a huge penalty to pay if you're non-willful. So first thing is non-willful. Totality of the circumstances. Yeah, there's things like reckless disregard and willful blindness, but for the most part, if you didn't know, you couldn't have known, you shouldn't have known. You got an account in a country you used to live in, you used to work in a foreign country, you have an account there, no one ever asked you about it, you're not actively using the account, you didn't file FBARs before and then stopped because the balance jumped up, you're probably non-willful. The next thing is you don't have unreported income. So this is one of the key components. A lot of times taxpayers will reach out and go, oh, I spoke to a CPA or an attorney. They said I could do delinquent FBAR because I didn't file the FBAR. In order to do delinquent FBAR, you can't have unreported income because you can't have to make any changes to your tax return that's going to impact tax liability. So if you have a missed account in a foreign country and maybe that account generated a few $1,000s of interest income, maybe you have a large account with dividend and capital gain being generated. Delinquent FBAR is for taxpayers who primarily just did everything correct but didn't know they had to file the FBAR. And so if you have the unreported income, typically you don't qualify. Instead, you do something called the reasonable cause, and they overlap because you need reasonable cause to prove your delinquency procedure submission, but technically you don't qualify for delinquent FBAR if you have to make changes to the tax return instead, income changes to the tax return. Instead, you would do the streamlined procedures if you qualify. Reasonable cause if you don't, or if you're trying to get the domestic penalty waived. Another very important component about the delinquent FBAR submission procedures is that you can't have other forms you have to file as well. So, if you have a smaller bank account, you don't meet the Form 8938 threshold, you don't have to do 8621 or 3520, 5471. The only form you have is the FBAR, and you have no unreported income, delinquent FBAR might be great. But if you have other forms you have to do as well, then instead of delinquent FBAR, it's a different program or procedure. It's called the Delinquent International Information Return Submission Procedures, DIRSP. And previously, you used to get the same penalty waiver that you would get from delinquent FBAR submission procedures, but in November 2020, they changed the program. They made it more difficult, so the IRS is not as lenient. That's not to say you can't qualify for a penalty waiver, but with delinquent FBAR, it's almost automatic. With delinquent international return submission procedures, it's not automatic. For taxpayers who are out of compliance and they want to get into compliance, delinquent FBAR submission procedures is a great program, but there's various other programs that you may qualify for as well. If you're non-willful, your options are typically the delinquency procedures FBAR, the delinquent international information return submission procedures, the streamlined domestic offshore procedures, streamlined foreign offshore procedures, or reasonable cause. If you're willful, then you do the voluntary disclosure program if you're going to do anything. The program has changed in recent years, and it's pretty rough, but it's still better than criminal investigation. We got a ton of free information available on our main website and our sub-websites. You can always reach out and schedule a reduced fee initial consultation if it's appropriate to your matter, and it's something that we handle here. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.